Well, it was certainly a good day. There's no question. I mean, we saw that the internals of the market were very strong. Nice jump in volume. Breadth was very good. It was more than 13-to-1 positive on the S&P 500. So it was a much broader rally. And of course, it took the S&P slightly above the kind of sideways range it had been in for about a month. So if it can get any kind of upside follow through, maybe not necessarily today, but later this week or into next week, that's going to be bullish. But I just, at some point, the fundamentals still do matter as much as I follow technical analysis, and I just don't think we're going to get that kind of follow through. And in fact, you talk about some of the things with these leisure names that did so well. I mean, the airlines are basically set up to run at full capacity. And they're saying that the things are going to improve, but they're still not going to run for more than 50% capacity. I mean, how does that really give you enough confidence to think they'll have a huge amount of upside follow through?
Yeah, exactly right. And let's not forget, I mean, he got kind of sort of hand slapped by the airlines over this. David Calhoun, the CEO of Boeing, saying, a couple weeks ago to the Today Show that he thought that it was likely a big airline did fail. I mean, it doesn't sound like you believe that the carry through on some of that big moves yesterday is likely.
No, I just don't. I mean, it's especially in the area like these leisure names. It's just the companies are just built for a different way. And you said when the CEO of Boeing talked about this, he didn't say they were going to go bankrupt or one of the companies would go bankrupt, that they'd fail, they'd close. When a company goes into bankruptcy, they continue their operations. That's a situation that when somebody from like Boeing makes that kind of comment, you have to pay attention. You really do.
When it comes to the overall markets, maybe we could throw up a one-year chart of the S&P 500, because this is kind of unbelievable. I was checking it out last night, and I realized with all these big moves we've had, we've effectively gone nowhere on the S&P since late April. Big moves up and down. We're relatively where we were. Is there anything that shows you, Matt, that we are either in some sort of positive basing or consolidation phase, or perhaps getting set up to make another leg down? What are you seeing there?
Well, as I mentioned earlier, this is that if we can break out above the S&P above its 200-day moving average, which is just below 3,000, that's going to be bullish on a technical basis. But the market was priced for perfection, and one of the things that concerns me is that the Federal Reserve over the last 10 to 12 years, every time they've been able to come in with their liquidity and fix both the market problems and the economic problems. This time around, they've only been able to fix the market problems and stabilize the markets. The economic problem is a healthcare one. And with so many companies sitting on so much debt, we have record levels of corporate debt, they need revenues. Liquidity doesn't help them get new revenues. And they need those revenues if they want earnings to go back to what we saw back in 2018 and 2019, which was already priced for perfection. So it's going to be tough, I think, for the market to rally a whole lot from here.